BP just doubled its quarterly profit, and the reason is uncomfortable. Let's break down BP, ticker BP, on the New York Stock Exchange. BP shares trade around $43, giving the company a market cap near $108 billion, a forward price-to-earnings ratio of just 8 times, and a dividend yield near 4.8%. The stock has ranged between $33 and $48 over the past year. Second quarter 2026 underlying profit hit $5.73 billion, more than double last year's number and above analyst estimates. Reported profit came in at $3.91 billion, up around 140% year over year. Operating cash flow nearly doubled to $10.9 billion. The driver, Brent crude, averaged roughly $97 a barrel, up sharply from around $78 just 1 quarter earlier, as the US-Iran conflict disrupted global energy flows. BP also raised its dividend 4%. Net debt fell to $22.25 billion, with $37 billion in cash on hand and a gearing ratio of 22.6%. Here's the bigger story. BP has been through 5 CEOs and 3 chairmen in just 6 years. Activist hedge fund Elliott Management built a stake and pushed BP to abandon its renewable energy pivot and refocus on oil and gas, reallocating roughly 75% of capital spending back to upstream. New CEO Meg O'Neill, an outsider recruited from Woodside Energy, took over in April to execute that pivot. BP also agreed to sell a majority stake in its Castrol lubricants business for $10 billion as part of a $20 billion divestment target. Wall Street rates BP a buy, with an average price target near $48 from 19 analysts. But there are real risks. This profit surge is largely a function of a war, spiking oil prices. A de-escalation could compress margins fast. BP is also being sued over a new Deepwater Gulf of Mexico drilling project filed on the anniversary of the Deepwater Horizon disaster. And even as BP profits from higher oil prices, political pressure over excessive energy profits looms. So is this a disciplined turnaround under new leadership, cashing in on elevated oil prices and dividend growth? Or a company one bad headline away from its next crisis, propped up by a war it doesn't control? Not financial advice.